Hey, this is CC with Options AI answering another one of our user questions. This one comes from Ram Krishna. He was asking, how do you use Options AI, or what's the best way to use Options AI if you have some particular levels in mind? And he was asking specifically about SPX, about zero DTE, short duration type trading. And obviously, Options AI has the expected move as the centerpiece of the platform, and we're looking at the 1 day 0 DTE, and we see a 60-50 and a 60-25 level roughly in the SPX. But a lot of times people want to sort of, if they're selling credit spreads, they're selling premium, they look at, back up the chart a few days. In this case, we're looking at the 5 day chart. So if you wanted to be selling credit spreads with some levels in your own mind above 660, let's say, and down here towards the recent lows, maybe like 559.75, the best way to do that, and this is the expected move, will be helpful here because you can see where you are versus the risk priced into the options market. So let's go in here and do an iron condor setup, and this is 0 DTE. Let's move this out to tomorrow. And what we're going to see is it gives us about a 60.75, which is above our level that we had chosen. So this would be a completely neutral iron condor at the moment with an equal amount below and above on our short strikes. If we took this entire trade and moved it down slightly, we're just going to come down here to about, let's do the 660 level as the upper call, and you can see that is above this high from the other day. And now that puts our lower strikes at about 59.90. Let's move those lower. So we're going to take this put, get down here closer to, let's do 59.60 and on the long strike and 59.65 on the short strike. So now we have this iron condor, looking at this on a 5 day chart. We're just above those recent highs. We're giving ourselves room if this market turned negative and went back lower like it did on Friday. We're giving ourselves room to the downside. And as we can see, it's calculating this risk reward, the max loss, max gain. We obviously, looking at the expected move, you can see just how bearish this is compared to where the SPX is trading right now. And in fact, our short strike at 60.60 is below that expected move up at 60.75. So we're leaning into the bearish side of this on a neutral trade. So this is a neutral trade, range trade, but it's not completely neutral. We're leaning towards the stock being able to pull back towards this range. And an ideal situation is we see SPX maybe return closer to that 6,000 level. And then at that point, our short strikes would be equally spaced from where SPX is trading. But right now we are leaning into a bearish, slightly bearish iron condor. Now, of course, if the SPX went higher for the rest of these 2 days, but didn't get above 60.50, this would be a max profit at expiry tomorrow. So it is neutral but bearish leaning is the best way to think about that.